we'll turn to Mark. I think our slides are up and ready to go. So Mark, if you can, let's see if we test if we can hear you. Mark, are you able to connect with your mic as well?
I'm Mark Lush with NORC at the University of Chicago at the Behavioral and Economic Analysis and Decision-Making team. And this is some research that our team did, myself, Angela Fontes, and Mimizi Zhu did in collaboration with our partners at the FINRA Investor Education Foundation, Olivia Valdez, Gary Matola, and Robert Gainham. So thank you to them. In the middle or at the beginning of the COVID pandemic last year, the market, specifically the Dow in this case, had quite a deep dip. In fact, it went down to 18,213 on March 23rd. And when this happened and its recovery, it prompted a lot of investors to open accounts. Or we saw a lot of accounts getting opened around this time. We began seeing headlines such as these in different various media outlets about especially young people piling into the stock market, opening accounts for the first time and the like. And so we got together and we were curious to figure out who were these people who were opening up these investment accounts. Specifically, we wanted to look at people who were opening up investment accounts for the first time. So using NORC's probability-based Amerispeak panel, we fielded an online survey between October 26th and November 13th with just under 1,300 respondents to figure out what was prompting people to open these accounts and was there anything unique about them. The way that we asked the questions and the way that we basically looked at the categorized these investors was to look at people who had not had a taxable investment account prior to 2020. These people who opened an account we labeled as new investors. We had a group of people who had an investment account, but for whatever reason opted to open a new account in 2020. These people were experienced entrants. And then we had people who already had an existing taxable account and did not open a new account in 2020, but we still were able to field the survey to them. These were our holdover account owners. When we look at the breakdown, we see that basically there were approximately 57% of people who in our panel who opened a new account in 2020. So we wanted to see what was different or how did these groups compare with one another. When we look at the breakdown by age, that's the top chart you see there, we see that among new investors, they are comprised of a lot more younger groups. In fact, we see that among new investors, we have the largest cohort of 18 to 29-year-olds, as well as the 30 to 44-year-olds. That flips when we look at the holdover account owners. These are primarily people, or the largest cohort of holdover account owners were in the 60 and over range. When we look at the investor type and breakdown by ethnicity and race, we see a really interesting finding, and that is that we have a lot more diversity within the new investor cohort than amongst the experienced entrants and the holdover account owners. And what's unique about this, and I'll get to it in a minute, is just how much women are driving those groups. We also were curious about the balances, and we can see that among new investors, we have a larger proportion there who have accounts with less than $500 than in the experienced entrants and holdover account owners. So these are people getting into the market who have much smaller accounts that they are using. The things that I'd like to call out here, as I mentioned before, were just how many were younger in the new investors and the proportion of African-American investors making up our new investor cohorts, over twice as many as in the experienced entrants and holdover account owners. What's really unique about this, I think, is that among the African-American new investors, women are really driving that number. We have 53% of those new, those African-American new investors were women. whereas with the white cohort in the same new investor group, only 43% of those new white investors were women. Similar finding is for the experienced entrants. Among the African-American experienced entrants, we have 48% that were women. Amongst the white investors, 40% were. And as I mentioned a moment ago, we have this large group of investors with small balances. So we were curious to figure out what were the reasons for opening a new account. And we asked these all of our investors to list the reasons. They could list as up to 3, and then we asked them what was your primary reason for opening an account. When we allowed them just to give their reasons, we see some interesting findings here that among the investors who opened an account based on a friend's suggestion, 51% are in the youngest age cohort of 18 to 29. That also follows, we have a large proportion in the who opened an account based on the recommendation of a family member. The other finding that I think stands out here is those investors who were prompted to open a new account based on a financial professional's suggestion. We see a much higher proportion of the 60 and over cohort, kind of following with some of the narratives that many of us are familiar with about who makes up these various cohorts and who are the customers of financial advisors. When we look at these reasons broken down along race and ethnicity lines, we also have some interesting findings. The first thing I would point out is that among the reasons listed here, being not wanting to miss out on an opportunity was one of the reasons that was across the racial and ethnicity lines, as was the ability to invest with small amounts. However, what stood out for us as well was that when we look at the retirement being a reason that prompted opening these new accounts, it featured for the white investors, Hispanic and Latino investors, as well as Asian investors. It did not feature at all in the top 5 reasons among African-American investors. As well, standing out here were the reasons that African-American investors said prompted them to open a new account, a friend's suggestion, as well as a family member suggestion. Those reasons also did not feature into the other racial and ethnic groups for why they opened a new account. When we look at this broken down along the new investors and experienced entrants lines, we also see some standouts here. I think one of the things that we were interested in, but I'm not calling out that much in this research, is the fact that we have a bunch of investors who are opening a taxable investment account for the purpose of saving for retirement, even though there are other more tax-advantaged vehicles for doing so. I think there are quite a few explanations that can explain this. We did not dig into that for our paper here, but I think it's interesting that there may be some barriers for investors to contribute or save for retirement, or there may be reasons that we need to explore further. But when we look at these reasons, the primary reason that these investors said that prompted them to open a new account, some striking things here. The ability to start with small amounts, as well as the dip in the market that I alluded to earlier, were the among the top reasons for both our new investors and experienced entrants. What is unique about this, I think, is the fact that the barriers to entry to investment and stock ownership in particular have really come down in the last few years. And we see this with the advance of online brokerages, allowing people to start with 0 or low minimum amounts that really have allowed people to get started with hardly any money at all. We also were curious to see what goals these investors had with their new accounts. Again, we can see the high proportion of investors who are stating that they had the goal of saving for retirement. But one of the other interesting things we saw here was, especially for the new investors, stating that the goal for their fund was to learn about investing. This is standing out to us as this idea of learning by doing. there currently exists plenty of avenues for investors to learn about or try out their ideas of investing without staking any money at all. However, investors certainly in our sample, were actually staking their own money and putting it at risk in order to learn about these things. Is an interesting finding. We also see, especially for the experienced entrants, that speculating was featured in their second most frequently cited goal for their investments. That also features, I think, prominently in some of the narratives that we've seen come out in the media. Some other things, and I will just make a quick word of this, and then I would hope to not mention it again. Our research came out long before any of the stories regarding Reddit and Robinhood and the like that have been featured in the media recently. That was not the purpose of our research, and indeed we did this study well before that news hit the press. But we did ask some questions about. I apologize. Let me go back. We did ask questions regarding media usage and where people were getting their sources for investing, which I'll get to in a moment. It was not for those specific reasons, though. This is that slide, the information sources used when making investment decisions. So what I think stands out here to us and really is interesting for how we might have some recommendations moving forward is the proportion of account owners who made use of financial professionals. So among those investors who used a financial professional when making their investment decision about what to buy, what to sell, a much higher proportion are the holdover account owners than the new investors there. This may be for a number of reasons, either not having access to or not knowing how to access a financial advisor, not really being marketed to, and also maybe some bias in not understanding how much money you might need in order to use a financial advisor. Again, when we look at the breakdown of who is using a friend or family suggestion for making an investment decision, we see this flip the other way. And then again, I wanted to just call out, we did ask the question about social media and online chats, which did not feature very highly. So that is our study, and I want to thank you all very much. I'm happy to take any questions.
Great, thanks, Mark. I'll open the floor up to questions and take the moderator's prerogative to ask the first question. I know, so this came out, we did the research well before the run-up, and I don't want to hammer the GameStop and Reddit crowd too much, but did you have any questions about expectations on returns to investing? And were there any differences across new and experienced investors? I did notice it was interesting that although it was higher in the experienced investor, about a third of new investors said they opened an account to speculate, which is perhaps a bit concerning. It's a relatively high fraction for pretty new investors.
Yeah, no, it's a good question. We did ask the question about what is your expectation for how your investments will perform, and the vast majority along all three investment groups said that they expected to, I think, basically get the market's return. Some of the more aggressive investors speculated that they were going to be earning higher returns than the market as a whole. But for the most part, I think the plurality of all three investment groups were in that get the market's return.
Interesting, thanks. Other questions? Please feel free to raise your hand or go ahead and type it right into the chat. I was also struck, I was surprised by the diversity of the new investors. I thought that was somewhat surprising. I guess now I've been very colored by the Wall Street Bets crowd narrative, and so it's good to.
Yeah, I think there's plenty of research in our study here that I think runs counter to some of that story. There's plenty that supports, I think, the narrative that we have in the more academic research about the diversity in the makeup of the investors. So the fact, just one of the facts that the majority of all investment groups are white investors, not surprising. But the fact that so many new investors are of African American and the Asian investors make up, it really is interesting to see what might be causing that and where wealth gaps and asset ownership gaps go from here.
Yeah. Yeah. Other questions? So here's a good question. Yeah. What influence at all do you think the stimulus checks or stimulus payments might have had on people starting to invest, particularly the new investor crowd?
Yeah, it's a good question. We did look a bit at the sources of the funds that some of our investors used. I think my colleague Angela is on the line. I don't know if she wants to chime in and say anything about that.
Angela.
Sure. Hi, everyone. Happy to be presenting this work. We did ask about folks were getting the funds to open these new accounts. And while we did see some folks indicate that they opened the account with received money, that was not a primary way that folks were opening these new accounts. So I don't know that we would necessarily have enough to speculate on the exact nature of the effect of the stimulus checks on investing.
And I will just add real quick that our report for the study is available at the FINRA Investor Education Foundation's website. And so thank you all very much.
Great, thank you, Mark. And please, everyone feel free to follow up with Mark after the talk if you have other questions that